On this episode, we're joined by Mark Cunningham, who is the co-founder of WhenFresh. Now, there's been a big drive towards automation in financial services in recent years, and underpinning much of this has been a whole range of new data sources. Here, we've been building digital products in the insurance and mortgage market for a number of years, and one name that has come up quite a lot as being a good source of automated property data is WhenFresh. So today, we're going to talk about how they built their company, who their customers are, and how it has the potential to improve business and customer experience. So Mark, thank you for joining us today. Do you want to start by giving us a bit of background about WhenFresh and what the company does?
Sure. So WhenFresh is a data or decision as a service business. So we provide information to financial services companies so they know what the next best action is.
Brilliant. I think I've seen you described as a property data supermarket.
Yeah, that's true. So that's our API service where we host billions of data items on anything property related.
Great.
And then the business is built on top of that, where we engage with the end user and say, what's the thing you need to know in order to know what to do next?
Yes. Okay. I guess before we dive a bit more into the technical part and some use cases, do you want to start by giving us a bit of background about yourself? Because I think you've got quite an interesting history, including a little bit of a history in the music industry, haven't you?
Yeah, it's been a funny route. So, started as an archaeologist. And then ended up in data because that made sense. And then into music. So I ran a music licensing company, and out of music licensing into this. How
did you make that transition?
Why did I leave the rock and roll world of music licensing and end up in insurance and fintech?
Yes.
A poor decision on my part. Look, essentially they're the same thing. A business is a business, whether you're licensing music or licensing data, or they're not as fantastically different as you'd imagine.
Okay.
So as long as you're outside the recording studio, obviously that's where the magic happens, but everything else is the infrastructure.
Yes.
So you're either an accountant or a lawyer or a marketeer or a data person. You just happen to be in music and a data person.
And for those that aren't familiar with, property data APIs or even APIs, perhaps we can sort of bring it to life a little bit about the use cases of who's using your...
The simplest way of describing it, you will know that there are insurance quotes or insurance companies online that are saying, or TV campaigns that are saying, you don't have to answer any questions, just give us your address and we'll give you a quote. The magic that makes that happen is an insurance API. So the use case is, you're a user, you're on a phone, you've got very little real estate to input data. All I need to know is, where are you? And then our machinery works out what the price is, or what do I need to know about that building in order for an insurance company to say, okay, we'll do it.
So I guess one sort of use case is around, say, sort of, you've got this home insurance
prefill. Yeah, that's the simplest way of describing it.
Yes,
so for you would only need to be able to say, I'm here. You wouldn't even have to give us the address. You just say, I am in this location, and that's good enough.
I think that's how I first came across your company, because we do a lot of stuff in the insurance world and the mortgage world as well, and obviously property data is really important. So I think the kind of insurance prefill around, number of bedrooms and things like that.
Yeah, that's the easy stuff.
It's probably the easy stuff.
Yeah, the more complicated or esoteric is, how close is it to the nearest tree? Is it in a flood zone? What's being built near it? Is there anything that's going to adversely affect the thing? So it's all of the questions that you would previously have asked an expert to go to in situ and have a look. You can now query and just ask the question.
Yes. So I actually had a look at your API document this morning for my sins.
Okay, sorry about that.
And there's a lot of data points on there. A lot of some of them seemingly, ones I haven't seen before, I swear. Where do you actually get all your data from?
Oh, partner companies. So typically what happens is an insurer or a mortgage lender would say, look, these are things that would concern us. So this is real. Is there a cattery nearby? Like a place where you'd leave your cat? Honestly, is there a cattery nearby? Is it any... This would make more sense. Is there a sewage processing plant which would be on higher ground to the place I'm going to lend to in the instance of a flood? Which, imagine why. So you just run through all those questions going, right, okay, I got to go get that data from somewhere. And then we have a team of people who go out and find the data. Just find partners who have that data.
I think there are kind of various, I don't know if they're open source, but certainly free data sources out there in the market for some elements of data. How does yours sort of compare?
Yeah, there are free sources. The problem about free data is it's really expensive if it's wrong. So you kind of got to make sure that even if it's out in the world, that it's absolutely mapped correctly to a location. Otherwise, free data is exactly useless if you can't use it properly. So there are sources. I prefer to use a commercial source to make sure that there's a warrant behind it. So if something goes wrong, somebody's next on the line. Free source of data, there's no warrant. So it's a bit tricksy.
And you say making sort of key decisions based on that could get quite expensive.
Yeah, it's not. Yeah, exactly so. It's not having the ability to go, okay, I made a decision on the basis that you told me to do something. And I think that's going to be the big jump, by the way. That's how I think the industry is going to change, is that you'll have fewer and fewer data companies as such, and you'll have more decision-based companies. So I'm going to pay you to tell me what to do next. I'm only going to ask you one question. If you're wrong, I need recourse. If you're right, great. So I can move that out of the way. Yeah. In the same way as people would have used a conveyancer or a physical surveyor in the past and said, it's up to you. I'm sending you out there. I'm going to pay you to do it. Write the report. And if it's good, we'll go. You should be able to do that programmatically.
Yes, yes. So how do you, so you've got lots of different data sources. I'd imagine some of them overlap perhaps. Sure. In some respects. So I guess we're going too technical. How do you ensure the quality of data, and how do you do that matching between different data sets?
So the way to do it, I'm giving away the secret. So the way to do it is you start off with what's called a canonical set, a set that you know is true, unavoidably true. So if you start with the land registry, then that's what is considered true. And then everything that sits underneath it, you could go, well, if they think it's a house, did the estate agent think it's a house? Does LiDAR think it's a house? You work your way down through the list of, I think it's a house. Yeah. But you got to start off with one place that says, I definitely know that's true. And once you've established a place where something is definitively true, then finding data sets that disagree with each other is finding wrinkles in the leather. That's where the interesting stuff is. So you think it's a house, you think it's a flat, you think it's a cattery. Fine, I'm okay with that. Probably means we don't know the correct answer here. Therefore, the decision is not carry on. The decision is hang fire, push that aside and check it later. Okay.
And I imagine some of this stuff probably evolved. I built a house extension on my last house and we remodeled it in quite a big way. How did that get fed into
Did you get the planning permission?
We did, yes.
Then it'll be in the planning permission. Planning permission will tell us there will have been plans submitted with it, so we can see the layout of the thing, and then LiDAR, or satellite resonance images, so I can see the picture of it. When did you do this?
This was 2016.
Okay, so we'll have 17 through to today will be satellite imaged. So you get the satellite image of more or less every house in the UK annually, cloud cover allowing.
Yes. Yes. So I guess, so we talked about...
Spooky, isn't it?
It is a little bit, isn't it?
Yeah. So you've been watched from space and we have everything written down.
I know. I think on our new house that we bought, we did a look up at the time on Zoopla, just to have a look at, and I think some of that data, it wasn't actually right on there, but we submitted like a tweak and a change to correct it. Does that that sort of thing filter through?
That's very interesting. So Ken Clemmer, who's our head of data science, was head of data science at Zoopla Group.
Oh, really? Okay.
Yeah, and they did a brilliant program, which was Claim Your Home, where people could input data and it would update it. You did it, right? Okay, right. So you were good. But one of the challenges about human input data is that one of the things that process was trying to do was give you the right price for the house or the right value of the property. And much like car insurance or home insurance key infills, people might veer away from true north and put in something to see, if I put a side extension on, what would it be worth? So, conditional clause. I don't know if you're putting data in to discover what it would be if I change the conditions or what it is. So when you have people putting information in, you've got to make sure that they're putting it in for the right reason, and therefore you can use that data. So yes, human input data, fantastic. Why are they putting it in? And does it disagree with what I already know about a place? Yes,
that's true. I didn't think about it that way. So I guess even kind of insurance, self-service journeys, people game the system. If I modify my car and I change this attribute, how do it change the price? I guess it's...
Okay, in a distant past part of my life, I was working on home insurance quotes on the insurance side. And we were looking at the quotes as they came through. I was a data analyst going, that's not right. And what you could see is somebody putting in, this is the reg of my car. I park it on the street. Quote. I meant I parked it on the driveway. That's not a driveway, but let's see what happens. Quote. I park it in the garage. Quote. All right. You can't. There's no garage. But it's just people putting in different variants of details to, exactly as you said, to game it. So you got to be careful of people gaming things. That is very true.
I guess as the kind of more premium service that you've got commercially, I guess there's an expectation that there's that high quality of data that's gone.
Yeah, if we're being paid to make a decision, then we better be right. Yes. So we have a valuation service where we ensure the valuation. So with our partners, CLS, so one of the big investors into our company, and that enables a lender to go, should I lend on that? What's the value of the property? And for us to go, the value of the property is X, and if we're wrong, and you repossess the thing, you lost money because you gave it the wrong valuation. We've got to pay it.
Yes. I think I saw you. Did you launch that last summer?
We did. Yeah, we've our first lender live now.
Amazing. Yeah, because obviously with the events of the last 15 months, especially that kind of first period, there was a big
great
shift
time to launch a new financial product, let me tell you.
Well, I guess there was already a drive towards automated valuations. People like Home Track in the market that are really strong in that. And up to certain loan to values, I think a lot of lenders were certainly happy to switch either temporarily or to AVMs. But
kinda. So okay. What happened? We launched a product at the same time as the insured product. Mm-hmm. And the second product's gone gangbusters, which is why I started off with we're moving into this decision as a service business.
Oh, the insured version?
Yeah, no, actually, strictly speaking, no. We launched the insured product, the insured valuation product, and that's been a tough sell.
Oh, really?
Yeah. It's like, you've got a lot of internal shenanigans going on at lenders, so you've really got to make sure they understand what it is and who's going to use it. Mm. Whereas the product has gone gangbusters. It's still being purchased, by the way, but the one that's gone gangbusters is actually a simple check, which is, this is property A. Does it fit inside my rules?
Okay.
So I was going to bring this up. I got an email from a lender on the way here in the cab this morning that went, okay, we're in. We're now on. We've got 8th deployment. So 8 customers since we launched have gone, okay, we better do this. And the reason is, you're right. Lenders wanted to move more and more into AVMs, and they would be right to do so. And I hesitate to say it, but I think Home Track would be the right partner to do it with. The challenge is knowing which of the applications that come through the door you can AVM, and it's not a loan-to-value issue. Okay. The issue is there anything unusual about the property? The loan-to-value might be fine, but do you know that it's not Monday blocks? Do you know that it had planning permission? Do you know? And those are the things that a valuer would check that an AVM can't. The AVM knows that the value is right. What it doesn't know that it meets lender criteria. Yeah. So for a lender to say, right, these are my 25 criteria. So it can't be wooden framed. It can't be built between this period and this period. I'm concerned about stuff that's got X percentage of flat roofs, ... whatever the rule set is. Fine, give me the rule set. And my team work out the rule set and then turn that into an API feed. So your lender A, your broker A, because you saw it we're now integrated with 27 Tech.
I saw, yes.
Right, so that's the product. Mm-hmm. So we take that out and put it out into each of the mortgage brokerage software houses to enable a broker to come on for their customer and tap in whatever it is the customer wants to borrow. That information fires over to us and goes, right, they want to go with Barclays. Barclays have 20 rules. The property is 1 the high street. Will this one fail or is it okay to go? No, good to go. Okay, great. Send it for an AVM. Mm-hmm. And that one jump allows you to go from a small number of AVMs to a large number of AVMs because you know it's not going to fail. You didn't need to send a human.
Yes.
Now that one is going out the door like hotcakes.
Okay, interesting. And I think we've certainly seen over the last sort of 15 months or so, fair to say, an acceleration of transformation in the mortgage market and lending, having been a relatively slow start to start with. I think obviously LTV is a very blunt instrument to decide whether to do an AVM or not. So right. I guess what we saw was actually it was only fairly low LTV scores.
Well, if you got a low LTV, what you're baking in is the improbability that something else has gone wrong, as opposed to being able to say this property will definitively pass your lender rules. You can go up the curve.
Exactly. So I guess that's what I'm driving at, is that solution will enable them to get sort of closer to normal sort of underwriting.
Yeah, the other big discovery in it was, we thought there were 2 groups, right? You've got your AVM group and your not AVM group, or your group that you're going to send, the ones that you're going to send people to go and have a look at. Mm-hmm. There's a third group. The obvious exclusions that go, this is not for you. Now, that this is not for you group in the current world end up going through for a valuer, and then it goes to the conveyancer, and then the conveyancer says to the lender, this one's got, I don't know, a septic tank outside the boundaries of the title. Are you sure you want to do this? And so you've walked into the bank. Our lender goes, hey, we'll lend to you. And then they say, could I have my arrangement fee? And then they send somebody out to have a look at the thing. And finally you discover 3 or 4 weeks later it's not for you. They won't do it. That group are the ones that cost all the money.
Yes.
So that is a complete cost base for a lender. They're never going to make money on those. And subsequently, that cost gets defrayed across everybody else who borrows something.
Yes.
So if you can cut those guys out and say, look, this is not for that lender, although that lender will take it. Big win.
Yes. On our last episode, we had a surveying company come and talk about how they're sort of transforming and using data and more desktop valuations. So I guess your product would sit alongside that?
Yeah, we're integrating with one of the big value firms as we speak.
Okay, yeah.
Because for exactly that reason. They want to go, oh, lender X. And we go, right, lender X really cares about this stuff. And by the way, that property, no. Or when you go to that property, make sure you check these things. It's like sending somebody out with their homework. They've got to know what to go look for.
So you've obviously got the insurance decisioning is an area that utilises your sort of data set, increasingly in lending, and mortgage and others.
Hugely in lending.
What other use cases are there, and what companies are utilising
Government.
services? Okay.
Governments, yeah. So they're asking, they need to know more about housing stock. What's being used for what? What's suitable for what? Can they convert something from being one thing into another thing? Again, all decisions by API. They just give us the rules that says, this is the kind of housing stock we'd like to build, and we need to know is X there already in order to be able to either make a bid for it or fund it. And
we're hearing that environmental kind of factors are going to be increasing part of lending in future.
No, are there now already?
Yes, certainly some products out there already now, and it seems like the direction of travel is going to be increasing in future.
Sure.
Do you have a kind of offering in that space, and where do you get that data from?
Okay, so let's do that order. Why offering and then data. So the why part is, if you've got a forward flow business, so you're a lender who's taking money from a third party, and you've got to get that loan securitized, so ready to be sold when it's bound. A number of the securitization purchasers, so that will be, Goldman's or their equivalent, who are buying those blocks of mortgages in, need to know that if they're going to take a 10 or 15 year risk on that set of mortgages, they need to know that those houses aren't going to end up underwater, occupied by mackerel, no good for loans. So to do that, you need to start scanning at the outset. So a loan application comes in, you want to know, is that thing floody, subby, climactically challenged? Yeah. So the very, very start point, origination point, lenders are now starting to scan against, okay, is it floody? Is it subby? Is there anything I need to know about this? Are there any challenges around where it's built or what it's built on? So that's the why part. And the easy, how do you do it, is you check the address and go, is it on any one of those things you just said you care about? Yeah. Like the last part is, where do you get the data from? So the Met Office released significant material planning information about what they think is going to happen climactically. And then there are a series of companies who analyze that data and write reports off the back of it. So there's several competitors in that space, and we just house those competitors, and depending on which lender uses which one of those providers of data, we just swap one provider out for the other one in the decision. I think that even within that market, you can see quality of data and types of data is changing. I saw a company called Terra Firma speak at an event a few years back, and it was amazing. They showed a presentation of kind of generic data that lenders have previously used, overlaid with new forms of data around like underground mines, and much more detailed to the point where you could actually type in your postcode and see, like, really, is there a mine underneath you, rather than so I think that will be increasingly sort of important moving forward. And Sergey Brin, co-founder of Google, just invested in a company called House Canary in the US that takes satellite imagery of rooftops looking for a condition pre and post storm. So it's when Google start getting involved or start getting interested, it's probably important. Yes. Yeah. And I think there are going to be a lot more companies in that space as we get very nichey. Do remember, though, that in different areas territorially, you have different potential climactic exposure. So the UK is largely water. If you take the east coast of the States, it's largely, and Caribbean coast of the States, it's largely hurricane. And then on the west coast, you've got largely fire, although not absolutely, given what happened in Canada. But so what you've got to take into account is what territory is the thing in, and what is the likely impact of what climactic event there, and therefore what data do you need? Yes. There's a good paper by Wooden Hole, and I think it was co-authored by Al Gore, on what area of the world is most likely to be impacted by what thing, and therefore what is going to happen to the insurance companies that operate within that area. Certainly a growth area. Yeah. I would say. So in terms of, you've got a very wide data set, lots of different data sources. I think the company's been around for about 10 years now since you founded. 12, I think. 12, right, okay. Is there anything on the horizon you're integrating? Or Yeah, well, a lot of it's live calls, so it's out to, actually, here's the big thing that we've noticed is companies, banks specifically, or in this case, banks and insurance companies, are now finding it easier to use us to retrieve their own data than it is for them to retrieve it from their own system. So we've got one of the big lenders have just gone, look, here, you have it. Okay. And they've dumped all their property data to us, and we serve it back to them enriched.
Is that because, I guess, a lot of incumbent financial companies have challenges around legacy systems, etc.
Yeah,
almost want to.
It's exactly what it is. It's legacy systems.
And they just get an endpoint that gives you an answer.
Exactly. So private endpoint for the lender. So they've given us their 1.9 something million properties that they insure with all the property details and gone, here, if we need to know something, you tell us about ourselves.
Interesting.
So that's been and that was their suggestion, not ours. We had not gone to them with this as a proposition. They went, well, couldn't we be one of your data silos?
Okay.
Yeah.
Interesting. So is that because you've got obviously those API endpoints that are public, is that, there's probably many ways to integrate. So one is they give you the data and you build something custom. Do you do sort of more traditional kind of flat file integrations as well? And
if somebody wants a flat file, of course you can. There's a downside to it that they're immediately out of date.
Yes.
That's the problem.
Yes.
So you're probably better off having a live connection, but we don't mind. Just whatever makes it easy for the other side.
Exactly. Sometimes we did a lot of work with, say, incumbents, helping them transform and navigating the world of legacy platforms and silos, etc. Yeah. Sometimes a temporary solution can ultimately lead through to a more permanent solution.
You'd hope, right? So as more of the customer service part becomes mobile based, having a legacy mainframe churning in the background just makes it nigh on impossible.
Yes.
So you want to have something which is extremely data light, and there are just methods for dealing with that. We don't try to fixate on the tool set as such. Somebody brings a car into the garage, you don't show them the nice shiny spanners, you just fix the car. So it's whatever car shows up, you got to work with what you're given.
Yes. So I guess we touched on it briefly earlier, but what's next in terms of WhenFresh as a company and on the roadmap?
So there are probably three things that we're focusing on. I mean, on the basis that your job as a chief exec is to get the company to focus on four things, and I hope you succeed on three of them, and the one that didn't, you don't tank the boat. So the three things that we're working on. The first is the data storage for third parties, where they give us data to look after for them, and also we can deliver that data to their customers. So essentially you make the company from being a supermarket, which you've described as, to being a warehouse. And it's a strong push we're getting from our customers. Please look after our own data for us and allow our customers collect it from you. Fine. It's just using the hardware that we already have. The second thing we're looking at we talked about decisioning as a service. I think that's going to grow very materially in the public space, in the government space, as more and more government departments have to make rational decisions which are under significant oversight to say, why are you spending X? And I think that's again, it's from the client push. It's not us going out hard selling. We are fielding stuff coming in at us where different government departments have said, I need to be able to do this. Is this the right thing to do? What data would you use to support that decision? I think that's going to grow very significantly. We've got a lot of the effort level pointed at that right now. And the third thing, I think, will be the insured AVM. Because when combined with the information about a property, plus the insurance, plus the valuation, it's the ability for more and more lenders to move away from manual work into pure digital. And we saw it, we pushed out a product with MCube. When was that? Start of last year. So that they can do instant decisioning on lending. I mean, we handled pretty much all of the property calculations. They are taking that model out and propagating throughout market, pushing to more lenders to say, do you want to use our backbone? The 27 Tech is the same thing. We're pushing more and more information out through 27 Tech, and we'll be doing it with more of the decisioning engines that exist in market already, which means that if you can see when a loan arrives at a brokerage, and then you can see that loan going from brokerage to lender, and also you're checking the rules as it goes along that feed, the last logical place for us to drop our service in is going to be on the surveyor's desktop or on the conveyancing folder, so that you can track the lead from one end to the other and check it as it goes through each of those gateposts and make sure the data is right. So I think we are, whether we like it or not, going to end up being a pipe for lending. So the kind of a Quest 2.0, somebody who handles data from the very point where the lead is originated, where a lead is a human who wants to buy a home. And we end up at the other end with successfully transacting that home and managing that workflow all the way through. I think that's where we're logically going to end up.
Sounds exciting. I mean, the workflow from broker to lender has been improving the last couple of years, but still there's a massive bottleneck around conveyancing and,
Yeah, but the bottlenecks are only there because the data wasn't looked at the outset. Keep calling it data. Just think about this more humanly. You want to buy a home, you have your heart set in a place, and what you want to know is that the lenders that are proposing themselves to you as potential fund sources will back you and that place. And that place is the one. They know you already. That credit scoring of people is done, right? There's very little marginal improvement that's going to be available. Whereas on a decision in principle on property, that needs to be nailed, because then we won't have the conveyancing problems that we currently have. We won't have those post-valuation queries. You get rid of that problem, you can lend faster, more efficiently, more safely, and it's better for the customer. Better customer outcome.
Couldn't agree with you more. So I guess as a final, and it's been really interesting to find out a bit more about WhenFresh. So as a final question, I've got to ask, the name WhenFresh. What was the thinking? What was the history?
Do you want to know? Do you really want to know?
Yeah, I do.
Okay, so
it's a good name. Don't get me wrong.
No. Well, it has been described as quite a headwind, but when you hear it, you don't forget it, right? Okay, so my first company, my first big company, cost £18,000 to buy the URL for MoveMe. And we were in a dispute with a German company. We wanted to buy moveme.de. Then we found out that the owner wasn't the company that they said they were. It was owned by a Nordic ski recovery group in Germany. And I had to buy .de with, they wanted a second-hand Land Rover. Fine, done.
Wow, okay.
So I thought, I'm never going through that again. So when Alan and I were setting up WhenFresh, we were thinking, what are we going to call a company? And Alan is a chief technology officer. He's phenomenal human being. And Alan said, we're not spending that. Well, we didn't have that kind of money to spend on a URL. So he wrote a piece of code that picked up words in English. Most words in English are gone already. Gone. Everything from, obviously alphabet to aardvark to, A to Z, gone. Done. So now you're using 2 words. Teaspoon houseplant. Is that gone? So we just wrote a piece of code that went, okay, all the words in English that are 2 letters, go and find all the 2-letter words, 3-letter words, 4-letter words, 2 words, 2-letter words with 3-letter words. And we just wrote, went, right, we've got this code that's now going to match any sets of words in English, stick them together, and then throw them at the licensing software, which I knew quite a bit about. Having come from a licensing software background, and went, right, we'll find out all the companies, all the names that haven't been used up yet. Okay. And then we got that list and sat down and went, okay, and worked our way through it and went, right, we can't use that one, we can't use that one. And WhenFresh was sitting in the middle. All right, how much is that? And I think it was $2.99. Okay. Done. So $2.99.
I love your honesty here, but you haven't post-rationalized and, actually with
No, because we did that initially. We said, it's data when it's fresh. And thought, you know what, that just sounds silly. And also it's not true. Yeah. And if you're going to do something, if you're going to base your company on decisions or providing data that's true, then you just got to get right into the DNA of going, all right, you want to know why we called it that? Because I'm a cheap ass and I spent $2.99 buying the name of a company. Yes. That's the truth. Well, interesting. Well, I think we're kindred spirits. When I was thinking of a name for my company around the same time, 13 years ago, I was looking at domain names that are available and short ones. So an approach was to look at a number on the end. And I was in the Docklands looking out the window. I thought, Doc9, I wonder if that's available. And it was doc9.com, and I think it was like $4 or whatever to buy a domain name. And people often asked, and sometimes I think I sort of try to post-rationalise the name, but actually I'm very honest now. And it's cheap. I'm cheap. Yeah, exactly right.
That's how we can provide good value to our clients, obviously. So
I'm going to steal that.
Brilliant. Good. Well, great to meet you today. Thanks for coming in, and thanks to our audience for listening.